Hey taxpayers, at the time of recording and posting this video right here, my most viewed video by far is a shorts titled, Should You File Exempt on Your W-4? And even though I personally feel like I have more videos that are much more informative, I can see why this one's popular. Well, first off, it's a short, so it's only limited to 60 seconds. So I have no time to go off on tangents or present fluff. I gotta get straight to the point, which is good for you because if you watch one of my shorts and realize, wow, this doesn't pertain to me at all, Trey, then at most you're gonna be out, well, about 60 seconds. So again, not a huge time loss. But I'm confident that the biggest reason why this one's popular is because, well, nobody likes paying taxes. Heck, my most patriotic of friends and clients aren't calling me asking, hey Trey, how can I pay more in taxes? This is a situation that just doesn't happen, and I don't ever really foresee it happening. So the fact that none of us enjoy paying taxes, the question of, hey, should I file exempt on my W-4? is actually very valid. But the fact that the video is only limited to 60 seconds is also probably its biggest drawback because again, 60 seconds is not a whole lot of time to get a lot of information out. So here in 2025, I'm going to continue to shoot out shorts as they come along just because again, they're fun and quick to make. But more importantly is I'm going to continue monitoring them, and if they get lots of views and comments and buzz or whatever, and they require further, detailed analysis or coverage, then I'm more than happy to make these longer videos covering them because again, I feel like that's kind of my duty. It's the right thing to do. So with that in mind, let's take a deeper dive into the question, should you file exempt on your W-4? So the first thing we need to understand is to take this question and dissect it so we kind of all understand what's going on. So the first thing we need to know is what exactly is a W-4? Well, a W-4 is a pretty simple form in theory, but in execution, it's not that simple. And chances are you've only seen a W-4 every time you took a new job with a new employer. Now, I stress that new employer part because if you took a new job within the same employer, so you either got promoted or demoted or you moved laterally to another team, chances are you didn't get a new W-4. But again, if you went to a new employer, chances are you did get a W-4 because that's generally a requirement for starting a new job. But also keep in mind that even though you may only see these every time you take a new job with a new employer, just know that if you were to go up to your HR or payroll person and say, hey, can I update my W-4? Then they should allow you to do it right then and there. Granted, if they've, are up to date on their technology, it's probably going to be built online and not actually paper formed. So again, whichever. But again, you are able to update it at any time. But again, generally speaking, the majority of us only see it whenever we take a new job with, again, a new employer. Now, this form is going to be used to estimate your tax withholdings. And that is what is really important. They're tax withholdings. And just so we're all on the same page, tax withholdings has no bearing on reality when it comes to your tax liability. And I may have lost a few of you right there by saying that, and that's okay. We're going to clear that up. So again, what we need to know is that your tax withholdings has no bearing on reality when it comes to your tax liability. And we'll get into a few examples and kind of highlight that a little bit here in a second. So what exactly are tax withholdings? Well, they're nothing more than just estimated payments made throughout the year. Because the thing is that income taxes can be very burdensome and very costly. And well, without withholdings, well, that means we would get a one-time bill once a year for thousands or tens of thousands, hundreds of thousands of dollars. And chances are people really aren't going to pay them. So the question becomes when it comes to your income tax payments, is it better to just pay it all off at once or pay it off as we go, like every time we get paid, like every 2 weeks if you're paid bi-weekly? Well, this option sounds more appetizing, and that's where tax withholdings come into place. So just to make the math easy, let's say you get a paycheck and you're paid $10 an hour, and during that pay cycle, you worked 10 hours. So you get paid $10 an hour and you worked 10 hours. 10 times 10 is $100. Now, I think we all know the answer to this question, but if you receive a paycheck, is your paycheck going to be $100? More than likely, no, because of withholdings. Now, things like Social Security and Medicare tax is actually very simple because it's flat. It's a simple just X%, and that just comes out. Income tax is a little tricky because we have these things called marginal tax rates. And because we have marginal tax rates, we have what's known as an effective tax rate that kind of smooths it. And again, that's a whole nother story. So we really never know our true effective tax rate until we do our taxes. But again, the biggest thing is that we pretty much can all agree that if you worked X amount of hours at Y amount of dollars per hour, your paycheck is not going to be those two times together because withholdings are going to be taken out. So for example, if you're paid bi-weekly and you have X amount of dollars withheld for income taxes, that adds up over time to include your total years of tax payments. And that goes against your tax liability, which again, we'll get into a little bit. But again, that's the whole idea of withholdings, is to actually spread out your tax liability and pay a little bit every time you get paid, just so we don't get hit all at once for, a pretty nasty bill. So kind of put this into reality. Let's take this for example. Let's say that your tax liability comes out to $9,000. So we need to come up with $9,000 worth of payments to tax in order to not owe anything. Well, if we are paid bi-weekly, our withholding should be 9,000 divided by 26, which again, 26 payments during the year, because again, that's bi-weekly. And that comes out to about $346. Now, again, if you withheld exactly that same amount when it comes to filing your taxes, it would show that we don't really owe much or have big of a refund. And again, that's the whole idea of withholdings, is to pay that tax liability little by little throughout the year. But again, let's get back to reality, because I just mentioned that here in the US, our income taxes are what's known as a progressive system. That means we have marginal tax rates, and the more you make, the higher your effective tax rate starts to go. And that means that percentage that you're trying to nail down is going to change. It's going to change based on your level of income and depending on what your filing status and deductions and credits are going to look like. So again, this percentage can change year to year. So it's a really kind of a hard puzzle to nail down. And well, that's where tax planning comes into place. But again, that's a whole nother video. So let's say hypothetically, your tax liability came out to $10,000 throughout the year. So again, you file your taxes and it says, hey, you owe $10,000. Now, the next thing you're going to do is look at how much you had withheld. In this case, what would have been, used for your W-4. And let's say the whole amount of tax withholdings came out to $9,000. So here's the insult to injury. Your actual liability was $10,000, but you had withheld $9,000. So this gap right here tells us that, oops, now we owe an additional $1,000 on top of the $9,000 we already paid. Now you might be saying, wait a minute, hold on, Trey, hold on. I've been paying taxes every time I get paid, every 2 weeks or week or month, whatever your pay cycle is, I don't know. Every time that you get paid, a portion of it gets set aside for income taxes. So I've been paying taxes all throughout the year. So why am I paying more taxes when I file my tax return? And again, that's a valid question. But again, it comes down to knowing the difference between withholdings and actual tax liability. Because see, filing a tax return is nothing more than just reconciling what you actually owe versus what was actually paid in versus what the IRS knows versus, whatever thing they don't know. And if you don't know what I'm talking about, actually, I think it's my most recent video talks about why the IRS really doesn't know how much we owe, generally speaking. So again, things like deductions and credits that you qualified for this year, but you didn't for last year, the IRS doesn't know that. But again, that's kind of beside the point. Where I'm going with this is that whenever we file a tax return, that's reconciling what we actually owe versus what we actually paid in. Again, whether through estimated payments if you are a self-employer, or in this case, like for W-4, if you are an employee, because again, that's what withholding taxes are. So to put this into perspective, let's say again, your tax liability came out to $10,000 on your tax return, but your withholdings only came out to $9,000. So again, that funding gap is going to be an extra bill on your tax return that says, hey, you owe an additional $1,000. You owed X, but you paid in less than X, so that gap, again, needs to be funded. But the opposite is true, because let's say that your total tax withholdings came out to $10,000. So whatever $10,000 divided by how many times you get paid, again, that's what came out of your paycheck. So again, you paid out $10,000 in withholding taxes throughout the year. But then you did your taxes and you found out, wait a minute, I only owed $9,000. So guess what? That difference there is a tax refund. Now, before we go any further, let me go ahead and just crap on everybody's parade. When it comes to tax refunds, we all love bigger and better tax refunds. Let's face it, everyone loves them, and well, people market them. Heck, it's now January. Tax season's starting up. You probably are seeing Facebook ads and things at Walmart that say, hey, we're going to get you your max refunds and whatnot. What sounds great, but it's nothing more than just a really marketing gimmick, because again, when we just did this example, hey, you paid in $10,000, but you only owed $9,000. Hey, you get a $1,000 refund. So how can we make our refunds bigger? Well, pay more. So again, if we only owe $9,000 and you were getting $1,000, Well, I want $2,000 of refund. Well, pay more. That's usually the most direct way. Now, granted, we can talk about, qualifying for certain deductions and credits, but the reality is the biggest driver for bigger refunds is just paying more. Just paying, again, with more withheld, which usually isn't the most sexiest of answers because that means your paychecks are going to go down, and in turn, your refund goes up. So again, you're on a seesaw. Do you want your refund to go up and your paychecks to be down, or do you want to, revert it or whatever? But again, that's just my take. So very rarely are we going to file a tax return where it says that you don't owe anything or you're not going to receive a refund. Hitting that zero perfect dollar for dollar matching is very tricky because again, if you over withhold $10, then well, you're going to get a $10 refund. If you under withheld $20, then you're going to owe $20 at the end of the tax or at the end of your tax return. So again, getting that to balance out is going to be very tricky. But I mean, it's seen it happen. But again, usually for the most common working person, it's going to be tricky. But again, the biggest thing is that we need to know is that your W-4 is nothing more than just estimating those withholdings, because again, the tax liability has no bearing on it. So going back to the example of, okay, let's say we owe $10,000. Withholdings came out to $9,000. Okay, that's a $1,000 refund. Cool. Opposite's true. We had withholdings of $10,000. Liability comes at $9,000. Okay, that's a $1,000 refund. Now, again, kind of what I just mentioned a few minutes ago. Oh, that refund is technically just getting your change back. So if I want a bigger refund, I just need to adjust my W-4 to have more taken out, which again, it's not really a pretty beautiful answer. So again, that's usually not a good trade-off. Now, let's take everything that I was just rambling about and just bring it all back. Should you file exempt on your W-4? Well, if you do, just know that that does not reflect how your tax liability is. So yes, you very well could file exempt on your W-4. That means your paychecks are going to go up because again, there's no income tax withholding, which sounds great. So going back to the example I said earlier, where maybe you had $9,000 taken out throughout the year, $9,000 divided by 26, which again is assuming you're paid bi-weekly, it comes out to about 300 plus bucks. So if you file exempt, that means you have a paycheck that's going to be $300 plus more than otherwise, which sounds great. But when it comes time to file your taxes, not only are you going to owe the tax liability that you originally had, but you have no withholdings to go against it. So now you got a tax bill of $10,000 or whatever. Well, sort of. Now you have what is known as underpayment penalty. So even though, yeah, you saved all this money throughout the year, you're going to get hit with a bill all at once for your original tax liability. But depending on how little or I guess under, withheld that you had, you're going to pay an additional penalty on top of your original tax liability, which could be detrimental. Again, usually can run 10 to 20%, give or take. But again, depending on, again, whenever you file your taxes, if you do it in February versus, maybe extended it, you did it in the summer, your penalty is going to be a little bit higher. But again, depending on 10 to 20%. So if you want to file exempt and you have that extra $300 in this example per paycheck, and you think that you can gamble it or invest it and have a larger return than the penalty that you're going to incur, then I guess technically you could come out ahead. You're going to be paying more to the government, but you received a larger gain from whatever you did, and then you just, net the benefit. Then congratulations, that's good for you. But that's not really sound advice. But again, if you think you can do it, hey, that's on you. So yes, at the end of the day, you can file exempt on your W-4 if you'd like. Just know that it doesn't affect your exemption from actual income taxes because again, they are separate. So it's usually not a good idea to file exempt when you actually are going to owe something because again, those underpayment penalties are gonna get you. And well, usually there's not gonna be a 1 year payoff that's gonna be greater than the penalty percentage that you're gonna get hit. So again, there's usually not much of a trade-off, but again, people have proven me wrong before and that's great. Heck, I had one person a few years ago that under withheld by a bunch and he got invested into some sort of, I don't know, maybe it was crypto, I can't remember, it's been a while. And he actually made more than what he was actually going to be paying in penalties. So he actually came out ahead. But again, results not typical. Now going back to the question that I posed a little bit earlier about, okay, if we pay taxes throughout the years through our withholdings, why are we filing a tax return? And if you remember my answer, it had to do with reconciliation. But even with that answer in mind, let's say that we don't file our taxes. So again, we have $10,000 of tax liability. Our withholdings only came out to $9,000. By now, you see me wave my arms enough to know that, okay, in this example, I owe $1,000. So again, if we did our taxes, it says, hey, we owe $1,000 plus potential underpayment penalties, but let's ignore that. So again, we owe $1,000 here, but let's not file a tax return. So now will not filing kind of, extinguish or dissolve that $1,000 amount owed? Well, technically no, because the IRS actually looks for that kind of stuff. They can see, okay, if we made so much and we've, did this amount of withholdings, okay, then they can probably see that gap. Now, going back to my prior video about what the IRS doesn't know, maybe they might be wrong. So if you actually owe $1,000, maybe the IRS is looking at everything and they say, wait a minute, you owe maybe $4,000, which again, now I feel like I'm kind of off on a tangent, but the reality is that if you don't file a return, the IRS might see, okay, you owe that $1,000. Oh, but you may owe something more on top of that, assuming that, again, maybe there's something that they don't know that would have been on your return if you filed it. But again, regardless of where I'm going with this, just know that yes, the IRS probably will be able to find that gap, and the insult to injury is maybe it might be a year or two down the road. So even though, yes, we originally owed $1,000, 2 years later you get a bill for that $1,000, but now you've got all the interest and accrued penalties from 2 years ago. So even though, yeah, it took them that long to find that $1,000 missing, the penalties have already been accruing since the date that it should have been filed. So yes, that's a serious question that I get every year. Hey, I've noticed that I paid taxes and I withheld X amount of dollars and I still owe something, so I'm just not going to file. Sorry, that's usually not how it works, because more than likely you're going to get a bill for that amount plus extra. So it's usually not worth just saying, oh, I'm just not going to file. Sorry to bust your bubble there. But if there's anything that you're going to learn from this video, this is going to be it, because the exact opposite is kind of true. And this is where I've seen people lose quite a bit of money. And I don't know if it's a status thing or whatever, but people have come up to me and said, hey, Trey, I have never filed a tax return and the IRS has never come after me. So I'm doing something right. And even though that sounds like a flex and that, I guess a flex, I don't know, chances are that's not a good thing, especially if you are an employee that gets paid a W-2, you've never filed a taxes, or at least filed taxes recently, and the IRS has never come after you in terms of bills. If you actually meet these criteria, I'm sorry to let you know, but chances are you've left money on the table. And well, since we can only amend and go back just a few years, depending on how long this has gone on for, there's probably a lot of money that you lost out on. And these are conversations I hate having because, again, I don't like people paying more taxes than they have to. I mean, that's why people hire me. But this is the reality of it. Again, we just talked about if you owed $1,000 and you didn't file, the IRS may still come after you. But the opposite is not true. Let's say, again, you had tax liability of $9,000, your withholdings came out at $10,000. Okay, that's a $1,000 refund that we're entitled to. So if I don't file a return, am I going to get a $1,000 refund? Chances are no. The IRS is not going to send us a refund unless we file a return that reconciles, okay, here's everything that's happened, here's everything that I paid in, here's my deductions and whatever, and I'm entitled to this refund. Then and only then will we get a refund. So again, if you don't file a return and you owe, the IRS will probably send you a bill. If you don't file and you're entitled to a refund, the IRS is not going to send you a check. And again, if you met those criteria that I had up just a little bit ago, that again, you are a W-2 employee, you have not filed your taxes, the IRS has not come after you, well, more than likely that means that you were entitled to refunds if you have just filed your returns. But again, since the IRS said, okay, they don't owe, so we're just going to move on to the next person, that means you probably could have gotten refunds for all these years you didn't file taxes, and they may be gone. So as a side note, if you did meet that criteria of, oh, I don't file my taxes and the IRS has never come after me, and you're a W-2 employee, please do this. Pause this video, go talk to like an actual professional tax person and see what your situation is like, because more than likely, at least from my standpoint and the colleagues that I've talked to and everything that I've seen in the real world, chances are you've had refunds for those years and, well, might as well go ahead and start claiming them because you're entitled to them. But again, there's a time limit of what you can actually file for. So someone that came up to me and said, hey, Trey, I would file for 8 years. Well, we could only go back 3 years. So these like 5 years of missed refunds, they're gone. And trust me, that's not a fun conversation to have. So again, if you met those criteria, please check on yourself because again, you probably left a lot of money on the table. So to kind of start wrapping all this up, should you file exempt on your W-4? Well, I guess you could, but just know that again, for the past several minutes or however long it's been, I've been swinging my arms around talking about why it's not reflective of your actual tax liability. So yeah, you could potentially overpay, which means, okay, cool, you get your change back in terms of a refund, or you will owe, whatever. But at the end of the day, if you're truly exempt from taxes, then yeah, file exempt on your W-4. So to know if you're exempt from actual tax liability, the easiest way is to, well, talk to a professional. Or, and I know you're probably not gonna like this answer, do your taxes. You see, line 24 on your Form 1040 is your total tax liability. It's the line that's going to take into account your income taxes, maybe self-employment taxes, and your portion of refundable credits. Once we take all those into consideration, you're going to come up with a number. Generally, it's going to be a positive number, which means we owe tax. Now, granted, this number can't be less than 0. So if this number is 0, which again, line 24 on your Form 1040, that's your total tax liability. If that number is 0, then there's no tax liability. And if that's the case, everything below that line on your 1040, which is going to be mostly your payments, like your withholdings or estimated payments, well, again, if line 24 is 0 and you had withholdings down below, which would be lines 25 and above, that means you didn't have to do that, which is good news. So one of the most common situations that I see where people are exempt from taxes are younger kids, like high school students who still live with mom and dad. You know, they're still being, financially dependent. They still live with them and all that fun stuff. So if that's the case, if you are a younger kid and you are working part-time, chances are you probably won't have an income tax liability. Now, I realize that's a very blanket statement. Not everyone's going to fit that criteria. But again, I'm just speaking from experience. If someone is younger, again, high school, working part-time, chances are you're probably not going to have a income tax liability because you're probably going to make less than standard deduction. You aren't going to be able to claim yourself. Your parents are going to claim you as a dependent and all that. So all in all, it comes out that your income is not really going to have an income tax portion to it. And if that's the case, all the withholdings that you had throughout that job is just going to be refunded back to you. So if you find out in advance, wait a minute, I'm not going to owe tax this upcoming tax year. If that's the case, go ahead and file exempt because more than likely, yes, you are going to be exempt. But again, I realize that's a very blanket statement. So again, make sure you actually consult with someone that knows what they're talking about and see if, again, you fit that criteria. Because if you are, then, well, you could be paying income taxes that you don't need to, and then you have to wait an entire, year, and then you have to, file taxes to even get it back. And, some people really don't want to do that. So if you are truly exempt from taxes, file exempt on your W-4 and have a higher paychecks because, well, that's the name of the game, I guess. So I hope that clears it up. Should you file exempt on your W-4? Well, at the end of the day, it depends. So again, hope this video was insightful, and until next time, thanks.